welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Philbin, Executive Vice President with Edelman, to discuss crypto's new regulatory moment, a new study by Edelman, which reveals how the potential for new regulation is impacting retail investors' perceptions of the crypto market. Brett, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
Can you provide us an overview of the study and the methodology behind it?
Yeah, sure. So back in late November, we at Edelman felt like with the possibility of more unified regulatory approach coming in the coming months, we fielded a study of 1,000 retail investors getting their perception of how enhanced regulation would affect their investment choices in the crypto market.
What were some of the major findings of the survey?
Yeah, sure. So we found that of those 1,000 retail investors that responded, 49% felt the crypto market needed additional regulation. Additionally, 44% of those surveyed felt that if more regulation came to bear, they would purchase crypto from their own bank as opposed to a fintech provider such as an exchange. And then finally, we found that 79% of women were in favor of additional regulation versus 72% of men that responded.
What accounts for the generational preferences on the need for greater regulation in the crypto space?
Yeah, sure. So we found that at the high end and the low end, so those most elderly investors and those youngest, the boomers and the Gen Zs of the world, they were more in favor of additional regulation, but those in the middle, the Gen X and millennials, were less so focused on regulation. And what that means is, those that are focused on the high end, they're focused on retirement, right? Those investors are older. It's more important to be conservative in their investing approach. Those at the Gen Z aspect are newer entrants to the marketplace. So for them, taking a more cautious approach. But those in Gen X and the millennial bucket, they're more familiar with technology and using crypto for everyday purchases. So for them, it really seems like regulation is less important.
Why do you believe women are more in favor of crypto regulation than men and in their preference for FDIC insurance?
So we've seen many studies in the past that have shown that women take a more conservative approach to investing, and that kind of bears fruit here as well. But on the flip side, we've seen that the male investors are a lot more focused on transactional activity. So if you kind of do the derivation there, those that are women are more focused on a conservative approach there, where the male investors traditionally are more less so.
Are crypto firms at risk given that 44% of retail investors would prefer to buy digital assets through their existing bank?
The data really shows the opportunity that crypto firms have. We saw the two lower ends of the spectrum, the Gen Z and the millennials, were more comfortable buying from an exchange or a fintech provider than their own bank. So you look at it that way, crypto firms have real opportunity because those investors are very comfortable with technology. They use it frequently. It's really kind of reassuring and taking steps to kind of get those older investors to come around and feel more comfortable with crypto because as we've seen, it's really gone mainstream and it's everywhere now.
And finally, Brett, how can crypto firms look to increase retail investor trust and navigate an environment of heightened regulation?
So there's 4 ways we see crypto firms being able to do this. The first is really on the security front. We've seen some unfortunate high-profile incidents of Bitcoin that's been stolen. The government's recovered it. So really making sure you communicate with investors and show them, what are the protocols we have in place so these security incidents don't happen. The second one's education. Having tools and webinars out there so investors that are new to the marketplace can transact confidently. And there's periods of market turmoil that happen. Crypto is very volatile. So really having those tools in place so they feel comfortable. The third is really having a team that's credentialed and skilled in the areas that you want to pursue. A lot of crypto firms are pursuing institutional investors. It's a key aspect of adoption. So having those Wall Street veterans that understand the marketplace and how to market those products in a compliant way. And the final one, perhaps most importantly, is on the regulatory side. Articulating a POV. So those firms, those institutions out there and those individuals know where you stand because we saw with some of the recent news, more regulations coming. And it's very critical those firms kind of know where you sit in the landscape and that you're taking into account.
All right, Brett, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you, Jill.